Hello everyone, welcome. This is Virender Rajaut. I'm a stock market expert and a coach. And today I'm going to discuss a very interesting topic. Okay, this topic is called Elliott Wave Principle. And this was, derived by a gentleman called Ralph Nelson Elliott. He was an accountant in US. And in 1938, he published a white paper which is called Elliott Wave Principle. And this entire principle based upon the crowd psychology. Okay, crowd psychology means how the prices are moving. So prices are moving based on the psychology of the crowd, which is participating into the market. So let's understand this, and let me start sharing one Excel file with you so that you will be able to understand this in a better manner. Okay, so this theory suggests that there will be five dominant waves. When I say waves, it means there will be the trending which will be happening. So there are five dominant waves which will happen, and these are called wave 1, wave 2, wave 3, wave 4, and wave 5. Herein, wave 1, 3, and 5, these are uptrending waves. When I say uptrending, that means it will be a bull market and market will go up. These waves will take the market up. Wave 2 and wave 4 in the five dominating wave 2 and wave 4, these are downtrending. That means market will go down. Okay. And after that, in the same market, there will be three consecutive corrective waves. Wave 1, wave B, wave C. As the name suggests, these are corrective waves. The market will go down. That means these are downtrending waves which will be happening. Uh, and this will fit into each time frame of market. Okay, let's understand this on the chart, that is our own Nifty 50 chart. I've tried to plot these waves in our Nifty chart. Okay, uh, now okay, look here. This chart is basically each candle here represent a month. This is a monthly chart which I have opened. Okay, this is a monthly chart. Don't worry if you are not able to understand the charts. This is very simple. In fact, if you stay, you will able to understand it. So what I've done, I have plot this chart from 2001 till date. Okay, 2001 till date. Now look at here. In our Nifty 50 market, wave one starts somewhere from 2001. And what are the characteristic of the wave one? The characteristic of the wave one is it will start at the inception of the bull market, when the bull market begins. So in our market in 2001, the bull market begins. However, at that particular time, the fundamental news are universally negative. Okay, there are dot-com bubble burst was happening, and there were the fundamentals of the economy was negative. The economy is not good at all surveys were saying it is a bearish market. However, a bull market happened. Wave 1, if you look at wave 1 from 2001 till 2008, so somewhere for 8 years, close to 8 years, it is a wave 1 which happened. Okay, the market, it is uptrending. Then wave 2 from you know uh, 2008 till 2009, the wave 2, we can say it is a wave 2 for Indian market for Nifty 50. Herein, this is a corrective wave, and the correction happened, but correction happened at 61.8%. As per theory, this is 61.8%. That means from the peak price of wave 1, it has corrected at 61.8%, right? Herein, the market sentiments are still bearish. Okay, that's why it has gone down. Now let's talk about wave 3. Wave 3 is the largest and the most powerful wave of a trend. Okay, as per this theory, wave 3 is the largest and most powerful wave in a trend. Okay, herein all news were positive. Everything was positive. Everybody is talking about the economy is growing and everything is positive. The fundamentals looking very good. This is the largest wave herein, and the period is also longest in a market. This is from 2009 till 2000, till 2019. That means close to 11 years. This can be termed as wave three for our market, wherein it is a bull market. Okay, and herein new subscriber, new investors, new traders will also join in. They will think that due to fearing of missing out concept, they have also joined in, right? After that, wave four will come in, but due to COVID, it has came a bit earlier, and it has a steep decline which is happening, and this is due to COVID, and this is globally, it's a global impact which has happened. This can also be termed as wave four. Wave four is a corrective phase. Okay, the prices generally remain sideways, but due to COVID, it has retraced back. When I say retraced back, that means the prices are down. Okay, and it has gone down somewhere close to 38.2%. The theory suggests that it will correct up to 38.2%, which has happened in wave four. Now wave five. Wave five is the final leg of the dominant trend, right? Everyone is bullish here. All news are positive. The new investors are jumping in, and they are jumping in at the top, at the peak. There are, every stock is going up, and they are jumping at the peak. Okay, and the wave five. Look at this period. This is from April, somewhere close to May 20 till it is September 21. It is a steep rise which is happening, a bull market which is happening. Now this is the end of the dominant wave. After dominant wave, as per theory, Elliott Wave Theory, it says there will be three corrective phase. Now these next three arrows which I have drawn, the arrow one, it can be termed as wave A of corrective phase. That means the prices are coming down, and we have witnessed that for last 1 year it is coming down. So probably next 2 years, next two waves, which can be termed a year as well, our prices will go down. Uh, but don't jump on to the conclusions. Okay, this is just a representation based on the theory. Our market will probably go down or not down. It is, the time will only tell. But as per the theory suggests that there will be three corrective waves which will be happening in the market. So that's all with respect to this Elliott theory. I hope you have liked it. In case you have liked it, I request you to subscribe my channel and share this with all. Thank you, and thank you for joining in.